Hello and welcome to Portfolio Matters, where I'm going to present an update to the Colonial Coal Share Talk presentation that we broadcast a few days ago. But before I go any further, here is Keith with the disclaimer.
Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. Take it away, Richard.
Thank you, Keith. So after we published the Colonial Coal International Corporation share talk, we had some comments, one of which was an extremely useful comment from Frank. And we wanted to incorporate that into our presentation and hence the update. So initially, so just to summarize what Colonial Coal is, it's a Canadian metallurgical coal resource owner with two 100% owned metallurgical coal properties in British Columbia. Neither resource has yet been developed, and both of the sites are located close to other major coal projects, providing logical buyer and partnership opportunities. There's a highly experienced management team with a proven track record, and David Austin co-founded and built a company called Western Coal Corporation, which was sold in 2010 for 3.3 billion Canadian dollars. So if you go back to the original share talk, I go through a lot of detail about Colonial Coal, and by the end of which these were my original conclusions. The demand for metallurgical coal is not going away, but is dependent on the world economy and steel demand. If the combined NPVs per the economic assessments are achieved, then the company could be worth around 1.7 billion US dollars. And at the current valuation of 116 million Canadian dollars, assuming coal prices remain constant, there's possibly 15 times valuation uplift. And then I talk about potential dilution to current equity holders to put the company on the watch list, and at some point maybe a small position to have tucked away. So I was slightly wary of it because of the cost of developing out this the two resources and the difficulty in determining what that does to dilution within existing shareholders. And Frank, who is a large shareholder of Colonial Coal, very helpfully contacted us with quite a lot of additional information. So I'd like to say thank you very much to Frank for that. And that's just the sort of feedback that we like here on Portfolio Matters, because we acknowledge that we can't get everything right. And if people have additional information that helps us in our analysis and in informing other people, then we are delighted to receive it. So Frank says that we missed the mark in the Colonial Coal's sale right now, and with a potential sale price of around $2 billion. That the in-ground coal is currently valued at 15 cents a ton, and that the last transaction completed 12 months ago in Alberta, the in-ground coal was sold for $3.25 a ton. Obviously a significant uplift on $15 a ton. He also explained to us that of the 180 million shares outstanding, most are tightly held within fewer than 10 groups, all of which are very friendly to management. He pointed out that as well as Warren Irwin, one of the board members, Partha Bhattacharya, was chairman and managing director of Coal India Limited between 2006 and 2011, which is a large Indian public sector coal and refining company, the largest coal producing company in the world, and produces about 82% of total production of coal in India. He explained what he reiterated the fact that Colonial Coal management understand the value of the asset they have and of the sale potential, and that they have the expertise to achieve a sale. and pointed out that two potential purchasers could be Teck or Anglo. So finally, he told us that Warren Irwin from Russo Asset Management in Toronto owns 33 million shares and regularly talks on CEO.ca, which I hadn't heard of actually, and that's a very useful resource, I think, for us to refer to in future. So we've put the links that Frank included in his correspondence with us in the video description. And as I say, thank you very much to Frank for that information. And that leads me to revise my conclusions to the point that if a sale without dilution is imminent, as may be the case, then there would be a large potential upside to owning this company now. Now, clearly that comes with the caveat that we don't know what the process of the sale will be and how long it will take. But I think that the additional information from Frank about the potential for a sale is of interest to everybody. So thank you very much. Do you have any comments, Keith?
Yes, well, I would just say, Richard, that defending slightly your original analysis, and the company is up for sale, and clearly there's a lot of new information, but buying companies where you're relying on a trade sale, I mean, that can be, it's a bit of a lottery, and it can take a very long time. And we don't know the internal dynamics of the market for these companies. And I have historically been involved in a lot of oil companies with exploration assets, which they're then trying to farm out. And that process can take years and can be very highly dilutive to shareholders. And we are going to go on and talk about a company called Altus Strategies later. And to give you an example of what can happen if you have a buyer's market and a development asset that needs to be sold. One of their assets, which is the Tabakorole mine in Mali, has a gold resource of $1.5 billion. Now, Altus have formed a joint venture with Marvel Gold to develop the asset. And if everything goes well, Altus can expect to receive about $30 million for an asset which is potentially worth 1.5 billion. So, you know, dangerous. You don't know.
Also,
go on.
Yeah, so I think that's an very interesting point, Keith. And also, it is somewhat binary. If it's sold, then the price will move in almost instantaneously to reflect the agreed price. And if it isn't sold, then the shares will languish for an unknown duration.
Absolutely.
So, I think what really Frank is saying is the emphasis on this company is not that it is going to be developing the resource itself, but that it will be selling the resource, that it wants to sell it quite soon. And you would invest with that in mind, but with the caveat that, as you say, we have no inside information as to what the price may be and what the timescale may be.
Absolutely. Well, thank you very much for that update, Richard. And thank you very much to Frank for actually providing us with some good feedback, which is very useful to us.
So it's goodbye from Keith Jordan.
And it's goodbye from Richard Wheater.
Goodbye.
Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make.
We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.